So let's take a look at Matrix. The first thing to understand is the stock is moving higher. You can see it's trending higher, and that's the first thing we want to look at when we want to enter a trade. So we're going to turn on our bar calculator here and track it through. See, stock meanders a little bit right here, and all of a sudden we break out. Now I'm going to stop it there. You can see we've got a buy signal triggered right here at $3.25. And the other thing I want you to take a note of on this chart is this red line right here. That's our trailing stop loss, and that will move up behind the price. When that line is penetrated on a closing basis, we're going to exit the position. So let's now trace it out again and follow it up. So we're in at $3.25. You can see the share price is continuing to move higher here. And all of a sudden, we're going to see that trailing stop pop up right there. So notice here that the trailing stop was moving sideways here, but here it aggressively moved up. And the reason being, down here you can see that red ribbon. It was green, and it was green back here in relation to the sideways movement. When that ribbon is green, it means the broader market trend is up, and we're happy to give the stock some room to move. However, when the broader market trend turns down, as it did here in early 2011, you can see it's turned red, we take defensive action. So we push our trailing stop right up. In this case, it's gone from $6 up to $8.37. Now remember, this is not a discretionary call. This is systematic. It's being tested. It does it automatically. So what that basically means at the moment is the probabilities of the stock continuing to rise have decreased, and therefore we want to protect any open profit in case it starts to fall. So let's start it up again and see where it takes us. Okay, so you can see now that we've got a close below that red line. We've got a sell exit there at $8.30. We've got a buy here at $3.25. So very, very nice profit on that position. At this stage, we don't know what's going to happen in this stock. It could go up, and if it does go up, we'll jump on board, or it could go down. Let's find out what happens here. So you can see that the stock has gone up very, very nicely, and it's come all the way back again. And that would be a pretty frustrating exercise for a lot of people to see those windfall profits come all the way back to nothing. In fact, in this particular situation, you've bought at $3.25, the stock's back at $3.7, you're losing money, but you were making a lot of money up here. So this is what active investing is all about. It's about riding the trends when they occur on the upside and staying aside the trends when they come back on the downside.